Pranoy Kurian of IDBI Capital is joining us now. He's Senior Analyst for Institutional Research at IDBI Capital. Good morning, Pranoy. Good to have you on the show. Take us to the overall impact. I mean, we'll go into company-specific and category-wise details later, but have you seen a big impact of demonetization come through as yet? Because TVS has reported muted numbers, but Maruti and Eicher seem to be holding fort.
Yeah, the numbers in some cases have been better than what people initially expected, because especially we see Maruti reporting a 14% growth was very impressive, especially if you look at the month-on-month trend. They managed to increase on a month-on-month basis. Not only that, the growth was led by smaller cars. So given that it's a market leader, passenger cars saw a positive impact there. Whereas some other players probably didn't see as good a performance. Overall, it's still, I think, a little too early to tell, because certain inventory cycles or inventory corrections could be taking place, leading to some segments still seeing some growth. So we'll have to see until December. But especially, I think Maruti and Royal Enfield really impressed.
Pranoy, in terms of where Maruti and Eicher is concerned as well. Now, as you mentioned, these two counters have really impressed the street as well, because the numbers have been above estimates, wherein if you talk about a Tata Motors, the numbers are slightly below estimates. Two-wheelers have seen a major beating as well, if you talk about a Hero Moto, or in that case, if you talk about TVS Motors as well. But with the guys who've really done well in the month of November, where there was an expectation of the demonetization effect trickling in, that has not played out. Do we expect that to come in the month of December, wherein the numbers will be weak for the players who have reported good numbers in November and have not seen any impact of demonetization?
So there's just one thing to remember. November 2015 was a weak base. So October 2015 was a high base, and then there was a year-on-year, month-on-month decline in the previous year because of the festive effect. So when we look at these numbers and these growth percentages, you've got to remember that this is a very low base. So even for these two-wheelers to fall 13-14%, that's a big number. So that's important to remember as well. And if you look at certain trends, like say TVS, their motorcycle sales, I think, fell quite sharply month-on-month. So those are the things where you've already seen a certain impact, and even M&M saw quite a negative impact. So I don't think that December sales will be worse than this. I think they will improve. And another thing is, okay, there were 8 or 9 days of the 8 days of the first part of the month where you did see normalized sales. So if you try to prorate the percentage growth, it's likely worse than the headline numbers. So I think December numbers should be significantly better, especially because December is typically a strong month for automotive. So I think December will be a positive month.
Right. Pranoy, but overall, tell me one thing. I mean, we were looking at quite a positive picture with the good monsoons, especially for two-wheeler demand, and we've seen scooters that have outpaced the growth as far as in comparison to motorcycles, as far as that goes. Do you think that the demonetization, the drive, as well as the kind of thinning footfalls, as dealer and channel checks suggest, is kind of likely to rob the sheen of that positivism?
So there's no doubt that two-wheelers especially will see a more muted growth in December as well as the next quarter, especially given expectations are quite high on the back of the positive monsoon and pickup in consumption. But since two-wheelers are probably less discretionary, especially because it's for many consumers, it's a necessary means of transportation, that those purchases can't be postponed indefinitely. So we expect that to start recovering, and that pent-up demand to recover sooner than later, probably by Q1 itself. Whereas some of the more discretionary players could see a more delayed pickup, whereas the larger SUVs or the sedans, they could see a slower growth. But two-wheelers should recover by Q1 FY18. At least that's our expectation.
Right. Pranay, talking about where the MHCV space is concerned, we did see a major growth that did come into this space over the last couple of quarters. However, last 2 to 3 months have been really weak for the MHCV space. And currently as well, if you see Tata Motors, they have seen some bit of weakness that has come in there. You talk about Ashok Leyland as well, the numbers. We've seen a growth of around 10% in the MHCV segment, wherein we did have an expectation of close to 19% growth levels. And do you expect that weakness, if you talk about where MHCV is concerned, to continue in the coming quarters as well?
So because of so overall we're not very positive on the MHCV cycle anymore because we feel it's close to its peak. And if you look at Q4 would see a pickup in consumption in MHCV sales mainly because of pre-buying norms. However, it's important to note that these are temporary. You're just preponing demand. It's not really sustainable. So we think FY18 is likely to disappoint even without demonetization. But the demonetization will probably delay purchases. It won't, that demand won't completely go away. Demand won't be destroyed. But so you will see a rebound in Q4. You'll probably see a strong Q4. But we think FY18 as a whole would be weak with or without the demonetization.
Okay. And lastly, Pranay, talking about where exports are concerned. Now, in terms of where TVS also goes, exports have been weak in this month. Bajaj Auto, constantly we've seen weakness in terms of where Nigeria is concerned, Brazil is concerned. So there are pockets which have been putting pressure in terms of where the export market is concerned. Apart from that, on the back of demonetization, also we are seeing some bit of pressure in terms of the domestic market. So overall, what will your call be on a Bajaj Auto as well as a TVS Motors?
So as far as exports are concerned, we've been negative on exports for quite a while, and we believe that this export weakness is not just a temporary phenomenon. It's a structural problem in the core markets that these Indian firms target, which is places like Sri Lanka, places like parts of Latin America, Africa. These countries have structural demand problems, and certain products that, like such as three-wheelers, are not selling as well. And motorcycles in general are not a big market as compared to scooters. So a player like Bajaj, the addressable market is limited. Scooters are the dominant player in most emerging markets. So there are multiple reasons why we feel export markets, it's not just a temporary weakness, but it's likely to remain muted at these levels. I mean, you could see a rebound of a low base, but the past growth that we've seen in export markets is unlikely to continue. Is unlikely to come back. So we're not very positive on exports for either of these companies.
Right, Pranay, and before we let you go, what does your valuation thesis suggest at this point? What would your pecking order be in terms of preference?
So we're not really positive on any of the three, the motorcycle players, the core motorcycle players. But Royal Enfield, we see it as a different entity altogether. We see this as a consumer brand that has multiple years ahead of growth. It has a long-term structural story. This you have to value more like a consumer brand. So we feel at current values especially, Royal Enfield looks a lot more attractive than any of these other players. So in the OEM space, Royal Enfield and Maruti Suzuki would be probably our only two top picks among the OEMs. We feel there's a much better risk-reward proposition there because they have a much longer growth cycle, and we feel it's more sustainable as well. So we prefer those two.